The Fed over the last year has spent a lot of time trying to manage the expectations with the market, with the reality on the ground, and things have come full circle this week, in particular today. You know the drill by now. You've seen it all around you. Everything is going down. Everything is becoming more expensive while people's portfolios are dropping into the toilet. The 401ks are tanking. We see stocks and companies across the board, whether or not it's the hospitality industry, the tech industry, cryptocurrency, the airline industry, energy sector, everywhere, technology in particular, everywhere is getting hit by this economic downturn that really kind of started a while ago, but really hit the fan last week. And now Jerome Powell, the Fed head, as I always like to call him, Fed head, on Wednesday, June 15th, he announced the tough decision that the Fed made regarding what has been going on. And we're going to talk about in this video how that might affect you. Welcome to Wrestling with Finance, the YouTube finance channel for people who have wrestled with finance in the past and look to do better with it in the future. Don't let any of the stuff going on scare you. Well, not too much, but we are going to talk about it here. And really, this all kind of starts with interest. So let's talk about the rate hikes. Now, the market for some time now has been kind of factoring in, or pricing in is what they call it, when they're looking at their accounts and looking whether or not to buy or to sell stocks and other investments. They've factored in the fact that they think that interest rates are going to rise. We know that interest rates are going to rise this year a couple of times, and the average was expected to be about 0.25%. Jerome Powell himself also forecasted not too long ago that he doesn't expect that the rates are going to go up in any kind of giant significant chunk. Certainly nothing over 0.5%, right? Right? Then we had what happened last week, starting around Wednesday or Thursday, between June 8th and today, the 14th, the market hit a pretty nasty slump, especially last week. And nobody predicted it. Financial analysts were caught off guard. Nobody saw that huge drop that we had back last week. And now a lot of people are wondering, how did everybody miss this so badly? This, of course, all led to what happened today and what everybody's freaking out about, and that's the fact that Jerome Powell announced that the Fed is raising their rates not 0.25%, not even 0.5%, but 0.75% of an increase. Now, this is the most that it's been raised in quite some time, several decades. This is the highest raise that we've had in interest rates, and it was an inevitable thing. What goes up must come down, as the old saying goes. Some people, and I already think we're in a recession. I've said this before on this channel. Other people do. Other people have said, well, it's not official until we officially see the numbers, but that is always like retroactive, because if the numbers show that we were in a recession in the second quarter, that we went down again for 2 quarters consecutively, then that means in the past, which is now, we are currently living in a recession. So what a recession is, again, remember, is when you have 2 consecutive quarters where the markets are basically down. That's the simplest way to say it. So somebody might ask, is like, well, why are they raising the interest rates 0.75%? The reason for that is while the recession is a concern, the inflation is the real hot problem that the Fed wants to handle, because long term, that could be far more damaging than a recession. Now, this is a question as to whether or not this spins everything up. The Fed futures could be pricing in more and higher rate hikes, and Jerome Powell has to kind of go along with it. In fact, it's been a tradition of the Fed to kind of go along with those predictions, and they are predictions. But for the last half century, it's always been that way. So in some respects, people were surprised that Powell did go along and raise this big chunk in interest rates. Other people said, well, he could have not done it and tried. But either way, I think the guy was screwed. So let's talk about not how I'm sure Jerome Powell is going to be fine. So let's not worry so much about him being screwed and worry about whether or not you and I are going to get screwed. Now, the unfortunate reality about this is that prices will continue to go up. And again, like we said, we're probably going to be entering a recession. Inflation's going to go high. So if you think things are expensive now, by the end of summer, you're going to really be upset. So all those people taking those pictures and making all those funny memes about how much gas is, and well, yeah, you guys get used to that. That's going to be like the biggest share thing for everybody 21 years and older on social media, probably for the next 4 to 6 months. The only benefit of this, though, is that if you are in the market for buying a house, or you're thinking about buying a house in the next year, things might get a little bit better for you. And I know, yes, interest rates are going up, but that also might correlate with the prices of homes probably coming down soon. Now, interest rates almost immediately shot up above 6%. And remember, at the beginning of the year and for most of the last couple of years, it's been averaging 2 to 3% or under. So this giant jump in the interest you have to pay on your home loan could be a sticker shock, and you might be going, oh, I don't know how that's a good thing. But again, keep in mind on the other end, because there are going to be less buyers and the inventory, which has been low, is going to go up over the next a year or two. That means the prices of the homes are going to go down. It's kind of like this balancing act where, like right now, there's a lot of people that were buying, but the inventory, because of the pandemic and because of other shortages, was very low. And now you're trying to reduce, this is going to reduce and this is going to increase and somewhat stabilize again to make homes more affordable. But in the foreseeable future, homes are going to become even more unaffordable than they are now, but there probably will be a tapering off later on. And if I was a person looking to buy a new home or looking to buy my first home, I'd probably wait to 2023, 2024 and see what's available then. Now, you're going to get higher interest rates than someone like myself who bought in the early to mid 2010s, which was very, very low interest rate. So you're not going to get those 2.75s, those 3%, those 3.25% interest rates on your home loans, but you're not going to be paying as much for the home if the prices go down. So hopefully that will balance out, and some of you out there who want to buy a new home will be able to do it a lot easier. Easier is a relative term. It's more to easier as far as the amount of money you need to save up. But again, with all of this raise in interest rates, the restrictions and the qualifications to get a home loan are going to go up more, and they're going to be a little bit more stringent. So it's probably imperative for you to kind of get your finances in order now. Now, as this is a personal finance channel and a stock market channel, we're also going to talk about what this means for the stock market. Now, yeah, the whole thing's down. We are officially in a bear market now, and a lot of people might panic, and I'm not a financial advisor. I'm not your financial advisor. You should not do anything with your money based off of what a guy says on the internet. Be sure to do your own research. This is not financial advice. All I can say is what I'm seeing out there and what I'm doing myself. In fact, a lot of people, and you will probably hear this in the financial space, will consider this a sale, even though it is hard when your portfolio is down so much and you see all these people losing money, especially if you're outside and you haven't started investing yet, to go, I'm not going to get into that, which is the opposite thing of what you should do. You should absolutely get into it now, or at least over the next 6 to 12 months, and try to take advantage of the fact that, yeah, it is a sale. For an example, there is a stock that I've had for a long time, and when I bought it, it was at like 35 cents. And when the market went back up, it went up a lot. And when it went down, it kind of went back to its original price and then went up again. And now it's kind of back down again. And what I've been saying all this time is that I wish I had bought much more of that. I have 100 shares of it. I wish I had bought a ton more, because the next time it goes back up, I could then cash out on it. And since it's so cheap, just again, do the multiplication of the amount of shares that I have when they're trading at 35 cents, and then me buying a ton more when the market goes back up and it just creeps up and all it's got to do is go up to $2 or $3. Yeah, that's kind of something I've been thinking about a lot lately. That applies to many stocks. And again, I remember, nothing is guaranteed. Just because something happened in the past doesn't mean it's going to happen in the future, although it is likely, because things like the market are cyclical. And that is exactly why I'm going to kind of echo what a lot of other people say as far as what my investment strategy is. I'm just going to continue to do what I've been doing, which is buying every Friday. I have a select amount of stocks that I buy at certain times every single Friday, along with crypto and some other investments that I have. And I'm just going to keep investing as I normally would, with the exception of some of the stocks, like I mentioned before, that I wish before, when they were cheap, I had bought a lot more. Now's the time I'm buying a lot more of them. And again, this goes back to the main thing to remember, that even though we're in bad financial times, if you look at history, which a lot of people seem not to do, but if you look at history and look at the trend of the stock market, at least over the last 100 years, you can see that it's gone through this before. It goes up and it goes down, and then it goes up and then it goes down, and then sometimes it goes up a lot, and then sometimes it goes down a lot. The thing to remember is that historically, even though we are in a bad financial situation right now with the markets and everything going into the toilet, remember, this is also the time that people make a lot of money. And throughout history, it's happened. Now that we are officially in a bear market, that is when, and as the quotes always say, fortunes are made in bear markets. We're not talking about fortunes of somebody who, like the Doge millionaire, no offense to the guy, but the Dogecoin millionaire, over 3 months and, Dogecoin shot up and he made all that money, which I think he held, and he's probably lost most of it now because last I looked, Doge was about 5 cents again. So hopefully he sold some of it, but for his sake. But no, I'm not talking about that kind of wealth. I'm not talking about that kind of riches. I'm talking about people who invest when the market is in a bear market cycle. They invest heavily, they invest as much as they can, and then when the market goes back up, they have lasting gains that are over 300%, sometimes even more. And I know even now, like I said, I had stocks a long time ago. In fact, I was gifted, speaking of wrestling with finance, I was gifted WWE stock a long time ago. And no matter what has happened with the market and as down as their stock is now, it's still nowhere near the price I bought in several up and down cycles before. So again, the people, and this is again not a guarantee, but the theory is the people who are buying and getting stocks and getting assets and getting investments as the market is getting to this low trough over time in the future, even if the market goes up and down in the future, it very unlikely will hit back to that bottom unless we have a really serious problem. And as time goes on, say you bought in at the bottom here, the market can keep doing up and down, but as time goes on, those bottoms that the market is hitting are getting further and further away from the bottom that you bought in at. And I can hear some of you guys out there saying, I'm still not getting into this thing, I don't care what he says, or I'm going to pull my money out. Now, keep in mind, as this chart shows, you can put your money back in and pull it out, but it's probably best to just keep investing regularly, because if you miss the 5 best days in the market, as this chart shows, again, only 5 days, it could cut your potential profits in half. So if you pulled out and you didn't quite pull out at the bottom, and then you saw it going back up and then you got back in again, you may have missed the best days to be in the market, where whatever you got down here is going to get the most gains. And that's why the smart investors always say that they will stay in the market. And you may ask, well, if people know that, why doesn't everybody do it? There are many different reasons why people pull out of the market. It's not necessarily a thing that they don't know. Some people have a lot of money tied up, and they might not want it tied up in the market. They might want to seek other investments while the market is down and utilize that money elsewhere. And then other people just can't afford it. They just don't have the finances to invest in something, and psychologically for them that they're going to see going down for the next 6 to 12 months before they see a return 6 to 12 months out. But I want to know what you guys think about this. Let your voice be heard in the comment box below. Are you planning to continue to invest if you are an investor and putting in as you do every single week? Are you thinking about going double, triple, quadruple down on a stock like I am, that I wish I was able to buy when it was cheaper about a year ago, and now that it is cheaper, I'm going to try to double down on it? Or are you just going to keep going normal? And if you're a person who hasn't gotten into the investment game yet, is this kind of deterring you from getting into the market, the fact that everything's going down? Or given the fact that this is the time when people actually do make a lot of money in the market is by investing during a bear market, does it encourage you to think about investing anymore? Let your voice be heard in the comment box below. And if you're one of those people who is looking to start investing and start your investment journey, you can check down in the links in the description box below. We got free stocks from Webull, free stocks from Robinhood. It's essentially free money. So you might as well check that out, get started, and take advantage of this market that's going down, and will eventually, we hope, go back up in the future. Thank you guys for watching. Be safe out there, and I'll see you again.